Welcome back. You're watching Midcap Radar on CNBC-TV18. From one management to another then, Balmer Lawrie is the next management on the show. Revenue and EBITDA margin came under pressure. Do note, company is engaged in various businesses of industrial packaging, lubricants, chemicals, logistics and travel services. To discuss more, we are joined by Adhip Nath Palchaudhuri, who is the chairman and MD at Balmer Lawrie & Co. Well, good afternoon to you, sir. I'd first like to start off by asking you about your outlook for FY26. In the fourth quarter, we understand that the top line has grown by just 5.5% on a year-on-year basis. So what is the kind of growth that you expect in FY26?
Firstly, thank you for having me here. We are having a fairly positive outlook for the current financial year. So the previous year, we ended with around 7% high on turnover and 12% plus on PBT. So we expect the numbers to be stronger in the current financial year, and we are looking at a turnover of something in the neighborhood of 3,000 crores maybe.
Thank you so much, sir, for joining in. So from close to 2,500 crore, we're expecting the top line to grow up to 3,000 crore. What can we expect, will be the corresponding EBITDA margins and PAT? And which segment of the business do you expect will actually go ahead and help drive business forward?
Yeah. So our EBITDA as a percentage, actually, we had an uptick. We did 14.73% this year as compared to 14.16%. And however, with the focus on turnover, we may not be able to hold on to that EBITDA, but we are still going to end up with a good profit figure. Now, the growth primarily are going to come from three fronts. One is the logistics as a cluster. We are having three businesses: logistics services, which is the freight forwarding, logistic infrastructure, as well as a cold chain. So logistics as a cluster, I think, is going to give us the maximum growth. Travel and vacations has been very strong in the last couple of years, expecting good numbers from there as well. And manufacturing, especially industrial packaging and grease and lubricants, should help us round up the figure to the estimate that we are expecting for the current year.
Sure, and you mentioned the logistics services and logistics infra business that will be your growth drivers for FY26. But profitability out here has been quite weak. So can you help us understand what is the reason behind this? Is it because probably there might be some increased competition out here which is putting a drag on your margins?
See, there are two separate businesses. One is the logistics infrastructure, where we are actually having these container freight stations, where historically what has happened is that the government has done many kind of initiatives in order to ease of business. And that has actually put, because the focus for the government is in the efficiency of the port ecosystem, and that has put the margins of this particular business under a little pressure. Logistics services, which is freight forwarding, I think at this point of time is going through a little kind of volatility, given the fact that ocean freight has been volatile. Various kind of challenges, like, for example, the war, the tariffs, etc., puts a lot of pressure on the buying of the ocean freight and also air freight, whereas where our customers are mostly contractual. So that is where we are seeing a little pressure, but I think we'll be able to overcome that with new initiatives that we are proposing.
So, one question that a whole host of investors, generally tend to ask us, especially with a large PSU like yourself, is that you actually have quite a large land bank in prime properties, across quite a few major cities as well. FY26, can we see sale of some of these properties? Will you look to unlock value there and thereby, further strengthen the balance sheet?
Now, this has been oft asked question. Right. And the answer to that is that we do not actually have a lot of land bank. Okay. So the question of unlocking value through sale of land assets does not really arise. Not in this financial, probably never ever, because we don't really have too much of a land bank.
Sure, and let's also talk about your greases and lubricants segment. How has that done in FY25? And we've seen that crude prices come off the highs that we saw last year. So will this impact your business out here, and what would it be?
So grease lubricants has been a strong business for us. In the current year, we fell a little short in terms of output as compared to the previous year. That was because we rely a lot on the base stock, base oil, which is our feedstock, and that typically comes from the various oil marketing companies, refineries. So we've had a long shutdown of HPCL and other refineries, which prevented us from sourcing enough of bright stock, which is a key ingredient. In the coming year, we are not anticipating any such shortage, and hence we should be able to do very well. Our profitability in this particular business has significantly improved over the last 2 years, and we expect this business to be a very, very strong business for us, especially if we are able to grow well in the automotive and the bazaar trade.
So one final question from our end. Expected capex outlay, if you could give us even a 3-year plan that works for us, and operating cash flow, how do you expect that to trend over the next couple of years?
Very good question. The capex actually will it's likely to move up significantly in the coming years, not necessarily in this year, because we are making a significant foray in rail logistics. So this year we are going to commission 3 rakes, and that is going to help us take cargo from our contractual customers from the steel plants from the eastern part of the country to the northern part. So that's going to be a fantastic business that we are just getting in. And as we stabilize that business, we are expecting to invest in a big way in rail-related logistics. That could be rakes as well as potentially Gati Shakti cargo terminals. But having said that, the current year, the capex is going to be in the neighborhood of around 200 crores, which also is expected to involve the capex for a large IT project, which would be the S4 HANA migration from where we are right now.
Sure. Thank you so much for that, Mr. Palchaudhuri. Thank you so much for joining in after your Q4 numbers. That was the management of Balmer Lawrie. The stock as of now is trading with a minor gain of 0.4%. The management said that they have a positive outlook for FY26 and a turnover of almost 3,000 crores is what they're expecting going forward. Now, as we slip into a break, here's some good news for our viewers. India's business news leader is now only a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at just your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.